Hey everyone, welcome to The Explainer. I'm so glad you're here with us today. Look, if you've been following the digital asset space lately, or let's be real, at any point over the last few years, you know it can feel like absolute chaos out there, right? We're constantly dealing with extreme volatility, these wild, unpredictable price swings, and just the sheer exhausting frustration of traditional crypto trading. You put your hard-earned money in, you cross your fingers, and you just kind of hope the market plays nice. Well, today, we're going to look at a fundamentally different approach. We're going to unpack the architecture of a system that actively escapes all that noise. To really understand why we desperately need a new approach, just listen to how Alex over at the Crypto Drip community puts it. He says, nobody knows where the price is headed anytime soon. Charts, you could look at them all day and still be as confused. And honestly, he hit the nail on the head. This is what we call chart fatigue. If you've ever sat there glued to your screen 24/7, trying to outguess millions of other traders and predict the future based on a squiggly line, well, you know exactly what he means. Trying to predict an entirely unpredictable market isn't just incredibly stressful. For most everyday traders, it's just a losing battle. So let's dive into this because we really need to separate the noise from the signal here. The noise is exactly where most retail traders get trapped. It's the stressful manual trading, the endless guessing, and hodling, which, let's face it, is basically just holding on to assets for dear life while your portfolio plummets when the market inevitably crashes. You're completely exposed. But then there's the signal, automated arbitrage. This side of the equation is built on pure, objective math. It's about exploiting structural market gaps and aiming for predictable income. The smart money, they aren't playing the guessing game anymore. They are absolutely ruthless about finding where actual, objective profit exists right now. So what exactly is the alternative to all this stressful guessing? Let's shift gears and ground ourselves in the actual mechanics of this solution. Section 1, what is arbitrage trading? Okay, simply put, arbitrage is the act of exploiting temporary price differences for the exact same asset but across different exchange platforms. And honestly, here is the best part. This strategy literally does not care if the overall crypto market is crashing to the floor or mooning to all-time highs. It completely removes the need to predict market direction. The only thing an arbitrage strategy cares about is finding structural price gaps that exist between two different platforms at the exact same time. Let's walk through a really concrete example to make this super clear. Imagine you're looking at exchange A, maybe it's Binance, right? And Bitcoin is listed there at exactly $60,000 flat. But over on exchange B, say Coinbase, at that exact same split second, Bitcoin is trading for $60,150. Arbitrage is simply buying the asset on the cheaper platform, exchange A, and instantly selling it on the higher platform, exchange B. You are literally just moving the exact same asset from a cheaper shelf to a more expensive shelf. $150. That's it. That is the instant, purely math-based profit gap you get from that single trading loop. Notice what you didn't have to do here. You didn't have to build some complex chart indicator, you didn't have to panic about macroeconomic news, and you certainly didn't have to guess the market's future direction. You just captured the mathematical spread that was sitting right there in front of you. Now, I know what you're thinking. If it's really that easy, why isn't everyone just doing this by hand every single day? Well, before you rush off to try this yourself, we have to talk about a major physical hurdle. Section 2, the human speed limit. This right here is what we call the manual trading speed trap. If you try to do this yourself, first, you actually have to spot the profitable setup across two completely different platforms. Then you have to scramble to open your exchange apps, you've got to manually place the trade, all while hoping you calculated the exchange fees correctly in your head on the fly. But here is the harsh reality of the market. These price gaps decay toward zero in a matter of milliseconds. By the time a human being goes through all these motions, literally physically moving their fingers, fighting their own internet latency, their own reaction time, not to mention managing their adrenaline, that profit window has completely vanished. Humans are simply too slow to catch them, which brings us to the core of our explainer today, and the technology that changes the whole shebang. Section 3, the FlashArbitrage solution. So this is where we completely bypass human limitations. The absolute crucial point here is defeating that millisecond decay. You can't out-trade a computer, so you need a better engine. FlashArbitrage is an AI-powered system built specifically to bypass human latency altogether. Instead of a human staring tiredly at two charts, this machine continuously and simultaneously scans over 50 global crypto exchanges. It uses machine learning models to lock onto these pure mathematical price mismatches. And then it executes the trade in just 12 milliseconds. To put that into perspective for you, a human blink takes about 300 milliseconds. This engine is doing the math, checking the routing, and securing the profit before you can even blink, literally. Let's demystify this technology a bit with some live trade data. Take Bitcoin to USDT, for example. The AI's smart routing spotted a gap between Binance and Coinbase. It executed automatically, navigating a positive spread of 0.34% to deliver a 2.4% return on investment for that single loop. Below that, you'll see Ethereum routed from Kraken to Binance for a 1.8% ROI, and Solana intelligently routed from OKX to Bybit, netting a 3.1% ROI with a 0.48% spread. The system is instantly calculating all the exchange fees and checking the slippage, which just means any unexpected price changes during the trade in real time. It completely, 100% removes the guesswork. Now, a massive question everyday traders have is, okay, but what happens when the market crashes? Well, turning volatility into a friend is actually one of the most powerful features of this entire system. Think about it. When the rest of the crypto market panics, when retail traders are panic selling and prices are dipping wildly all over the place, that chaos actually creates wider and far more frequent price discrepancies across different exchanges. FlashArbitrage doesn't care that the price is going down. It actually uses that structural market chaos to secure even larger profit gaps. The worse and more volatile the market acts, the better the arbitrage opportunities tend to become. Now, you might be thinking this sounds like something only Wall Street hedge funds have access to, right? But what we're looking at here is institutional-grade architecture packaged specifically for everyday users. We're talking about that lightning-fast 12-millisecond latency trade engine and the simultaneous scanning of over 50 exchanges. But crucially, it also features bank-grade security. That means the vast majority of funds are secured in offline cold storage, complete with enterprise-level encryption and two-factor authentication to totally lock down your account. Plus, it features automated risk management with built-in stop-loss and exposure controls. Essentially, it's a secure, plug-and-play system designed to protect your capital, whether you're a complete beginner or a seasoned crypto veteran. So let's see how this actually builds into an actionable strategy for you. The barrier to entry here is incredibly low. There are really just 3 simple steps to start participating in these automated loops. Step 1, create an account. This only takes a few minutes to pass the secure KYC identity check. Step 2, fund your secure wallet with a deposit. And step 3, start trading by simply enabling the Autobot. That's it. The machine handles all the lightning-fast math and the execution. Your only real job as the operator is to have the discipline to turn the engine on, step back, and just let it run in the background while you go about your day. Which leads us to our final and perhaps most important question for this explainer. Are you ready to stop guessing and start executing? Every single manual indicator you rely on gets crushed to zero the moment the crowd spots it. It is time to realize that predicting the future of a chaotic market is a trap. You can leave the noise of chart watching behind, switch to pure objective execution, and let an automated engine turn market volatility into your own predictable advantage. Thank you so much for joining me to explore this technology today. I really hope this completely changes how you look at the digital asset market.